Good morning, everybody. It is Sunday, December 15th, and we are going to start going through last week's S&P price action and our COT reports. Were you ready for the rinse and repeat cycle that was in the market last week? Do you know where the bids are in the market and the hundreds and millions or billions of dollars that are sitting there before the day starts so that you can get prepared and get a jump on everybody else? If not, it's time to level up your game. First, a quick reminder, derivatives trading is inherently risky and past performance is not indicative of future returns. If we review last week's trade we laid out on our video as well as on X, corn we had as a long trade, and Monday we had an entry at 438 a couple times, and we had an entry Tuesday at 442, and we reached our upper target of 448 for a nice move, and then right back down through our upper target, where we would then look for the short, right back down to our 442 level. So a nice push, and especially on the WASDE reports when those came out, and same thing on wheat. So we had mentioned watch for those reports on Tuesday morning, and wheat we were looking for a long on the report, and we made our move from our mid pivot here at 556 up to our target of 564 for a nice 8 point trade with minimal risk on it. And then like corn, a reversal into the end of the week at our upper rotational zone. The euro, we saw a move lower as commercials continued to buy, which we were looking for would be a signal of strength in the dollar, weakness in the euro, and that played out again with some nice shorts all week long until we came a couple pips away from our lower rotational level and where we would want to be out of our short and then looking either for a short-term bounce or just waiting for the reload again on the short side. Onto the S&P, a nice rotational week just from our rotational high to rotational low and just the washing machine back and forth. And for the week ahead, commercials are still net short, but not at triggering levels. So we're just going to wait and watch for this to develop as it takes time for that money to get trapped in the markets. The NASDAQ is the other one we're going to watch. And while we are getting positioning signals, our open interest is what we need to see rise a bit more before any kind of reliable signal comes in, but we are inching our way closer. For now, this gives more room for the end of year rally and for Santa to bring some more profits to all the good boys and girls that are in the trading rooms these days. So we're looking for, again, this open interest kind of spike on the NASDAQ, and we will keep you posted on that in the days and weeks ahead. So if we review last week and we peek behind the curtain again, as we always like to do, we stayed in our rotational zone, holding our rotational high as resistance and our rotational low as support. And we expected that price action at the beginning of the week, and it gave some nice trades throughout. Monday, we did mention that without a catalyst and at the start of the week, there was a higher chance of moving out of our consolidation zone. We had this $3 billion offer that was sitting here right at our 60.53 level. And we knew that fund managers had 15% of their cash on the sidelines, so they'd have capital to deploy, but not quite as much as they've had in the past. And we knew that nobody was coming into the week with protection for CPI. And we knew all of this pre-market or at the end of the day last Friday or pre-market on Monday, depending on when we decided to look. And all that we had was a move down. We had that 60.53 as the big level we wanted to watch and expectations that that would be, if we started to come down, that would be where the market would stop. And that's what we saw play out. Tuesday, pre-CPI, we were looking for that downward pressure to come in. And we were looking for this to happen in the higher volume period. So we came into the day without any real insurance protection, and we saw the spike right at that 130 time. And again, we look for those higher volume periods, initial balance, the post-London close, our afternoon session, and right on cue. So we had our plan in the morning that we would see that downward pressure in 60, 38, 40 area would be our low of the day. And that's right where we came into. And right at 130, we had the rest of the sell-off. And so we knew what to look for. We know where to look. We have the indicators. And if you don't know where these bids and offers are sitting in the market and when people are going to have to do something, then you're really playing the game at a disadvantage, and it's time to level up your game. You can check out our Discord offerings or our courses, but it's time to get more prepared than everybody else on the desk so that you can stop giving your money to the market and instead start taking it out of the market. So we knew that we also wouldn't want a lot of risk going into CPI, so we made our push right back up to our 60-50 line in the sand to close the day. And Wednesday, we had, again, a little bit of underinsurance. It was better than it had been, so it told us the downside was still there in terms of our overall risk, but not quite as much. And all that we did on Wednesday, CPI came out right in line with expectations, and we went from our lower rotational zone on our weekly plan, and our major level from the prior day, and right back up to our upper rotational zone, right where we had our red level here for our highest expectations of the day. And we knew that we wanted to get long at 60.72, and that's what happened right after the open. We opened right there and then pushed up. And congratulations to many students that took that and rode it all the way up and then caught the short right at our upper level with about 1 or 2 ticks of risk at high of day for the end of day liquidation. And that's where that tail risk comes in. This was a great short if you knew who was making this move in the market and then realized that our tail risk was still coming ahead of the PPI day. PPI is often the forgotten sibling to CPI. We typically see CPI get the most attention, but PPI can have a larger directional impact. And so we sold off at the end of the day, and we were coming into PPI with, again, no insurance in the market, no protection, and the downside risk was possible. And we knew our major level, our major line in the sand was right here at the 60.58 level. And that's where we came down to into the end of the day. So we just liquidated on that PPI. So squeezed out the early shorts, the people that were betting on the move a little too soon, and then we've just liquidated since. So Friday, we come into the day with no catalyst on deck. There isn't going to be insurance being bought because the next major catalyst is FOMC on Wednesday. And so this meant that Friday had potential for an outsized move. And once again, we followed through to the downside, that tail risk, and came right to our lower edge from the week, our lower rotational from Monday COT levels we posted on X. And all we had in the end was a nice large rotational week with predictable edges. And we just came straight down from the open, right down to our lower edge that we were looking for, and then right back to our line in the sand. Now, the big thing to pay attention to here is all week we kept coming down and we would hold this line in the sand. We couldn't get underneath it. Now we're below it as we head into the weekend. We want to pay attention to this for the early signs on Monday and Tuesday of potential continued downside ahead of FOMC on Wednesday. So a reaccumulation possibility in anticipation of FOMC and Powell's press conference that will signal the last rate cut of the year. It'll start signaling next year's cycle and the dot plots, and then we can see the Santa Claus rally potential begins. So that's what we're going to watch for early in the week. This becomes our biggest level to pay attention to. We will post our levels on X on Monday for the week. And don't forget to like and subscribe if you want daily preps to continue and more peeking behind the curtains on these weekend videos. And don't forget to control your risk and have a great week and stay safe trading out there. The goal is to survive and grow over time. It's not about a single day. So remember, your job is to control your risk and survive for the next trading day and the next. That's what we want to help you get prepared for. Have a great weekend, everybody.